Good evening, everyone. Thank you so much, Investors Expo, for having me here tonight. Tonight, I will be talking about how to generate a living trading institutional moves, high velocity moves, trading the near trading session open. So that's only 2 hours and done, basically from 9:30 a.m. until 11:30 a.m. Eastern. Before we begin, I want to remind you that trading involves a high level of risk. It may not be suitable for all investors. You could lose money. So before deciding to trade, you should carefully consider your objectives, your level of experience, and definitely your risk appetite. Individual performance depends upon each person's skills, time commitment, and effort. Results may not be typical, and individual results will vary. So therefore, you must do your own homework and your own research and before you take any trading decision. So let's begin. For those of you that are new to tonight's webinar, I want to welcome you and I'm going to tell you a little bit about myself. My name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I have been a trader for more than 20 years, and I have created Trade Out Loud in 2010. So this is our 10th year anniversary. I day trade futures in the first 2 hours, and I swing trade stocks for the rest of the day. I am a professional independent trader focused on equities and futures for the last 17 years. So what that means is that 17 years ago, quit my job and I went full throttle into day trading and swing trading and active investing on my own. Prior to becoming a professional independent trader, I also come with 10 plus years in investment banking. So I do have the background and also the education in economics. I'm the designer of an institutional proprietary trading system. The reason why I'm the designer is because I cannot take credit for it. So what I did is I took the institutional model and I had adapted it for the retail trader. That was just me at the time. And now I have adapted it for all retail traders to be able to trade, regardless of the account size, smaller account size, larger account size. It truly doesn't matter. It is a system that works for all account sizes. The system is simple, yet complex. It is based on price support and resistance, and I focus on cluster locations. What that means is that I'm looking basically for 8 layers of price support resistance to create confluence for the price to trigger off of that zone. I'm also known for designing specific trigger times. These are proprietary for the Trade Out Loud methodology. These come from years and years and years of trading, obviously from a multitude of time spent in front of the market. These trigger times are very accurate. To give you a quick example, because I trade the New York trading session open, there are just 3 trigger times. The first trigger time comes at 9:35, which also represents the first reversal time into the market. The second trigger time comes at 10 o'clock, and then the last trigger time comes at 10:30. And 10:30 is actually my favorite, and it's the prime time trigger time. So based on these trigger times, I'm also looking for chart correlation and for specific price zones. There are 4 specific price zones on charts that actually determine institutional buying, layering in, and also target zones. Also, chart synchronicity and divergency. I'm going to share with you a chart in tonight's presentation that happened this morning. This morning, we had huge divergency happening to the market. If you guys have been trading today, you probably have noticed, and if you trade futures or even if you trade stocks, and if you have looked at the ETFs, the market ETFs, the Qs, the SPYs, Russell, and the diamonds, you would have noticed the very severe divergence from the market. So basically, when we opened, we had a straight move up into the Dow. And we also had some really strong participation from the Dow stocks, in particular from Boeing. And at the same time, we also had the similarity in the price that happened into Russell. So we had two indices that were pumped up, and we had one index in particular today, NASDAQ, that was very weak. It was actually very weak. And it's right from the open, it started to pull back and pull back quite severely. So as NASDAQ was going lower, the Dow was going higher. That is called divergency. And that was a chart that was not synchronized with the overall momentum in the market. So what that means for the retail trader is that there is something happening. There's a change, there's a shift that is happening on an institutional level. So for that reason, anytime this kind of divergency is occurring in the market, it makes day trading and even swing trading very treacherous. This is the optimum time that if you're in swing trades, you should definitely apply tighter trails. And if you're in day trades, you have to wait for price evidence and confirmation into the direction, because it's not common for the indices to move in opposite directions. I also use a strict set of trading rules and a 10-point scoring system that enables myself and my traders to identify high velocity trades with ease, because I specialize in high velocity moves. So what that means is that we're looking for the smallest risk that we can attain in the market, and we look for massive follow through. And we actually get into trades alongside institutional traders. So we don't wait for institutional participation or for their footprint. We get in at the same pace with them. I'm very proud to announce that TradeOutLoud was nominated for Outstanding Performance and Best Financial Literacy Tool by Benzinga Global FinTech Awards. So it is such an honor to be nominated at this worldwide event that has been, and it is going to go on until the month of November. If you guys want to get a hold of Trade Out Loud and see what Trade Out Loud offers, you can head on to our website. It is tradeoutloud.com. Now, keep in mind, our website is 10 years old. We will have a brand new, really sparkly website that is going to be ready in probably a month or so. And we're going to celebrate that with a special deal as well. If you guys are on social media, our handle is Trade Out Loud, whether you're on Facebook or Twitter or YouTube or LinkedIn. On Twitter, I provide a plethora of trading ideas that are happening in real time. Today, for example, if you head on to twitter.com/tradeoutloud, in the afternoon after 2:30 p.m. Eastern, there was a washout in the market. So the market came abruptly down again, and this time around was in perfect synchronicity. Now, I've noticed what happened in the market, and I have tweeted that we had a really nice formation for a possible move to the upside. That move generated more than 35 points to the upside, actually about 40 points to the upside. And that was in NASDAQ. Now, if you have never traded before futures, 1 point in NASDAQ is $20. So about 35 points in NASDAQ, that is a $700 move with only one contract. That is a very powerful move. And that's one of the reasons why I love to trade futures. When I started my trading career, I started stock trading. And first of all, swing trading, I come from a background of investing and swing trading equities. And when I decided to take on retail trading and trade my own trading accounts, I dove into day trading stocks. And I have been day trading stocks for a very long time. So probably for about 15 years or 17 years or so. And I realized that there is an easier way. So if you are a stock trader, you're in for a really, really big treat tonight, because I will show you the power of trading futures and how you can simplify your trading. Because right now, let's face it, we're all into simplifying our trading systems. So we have more time for ourselves, we have more time for our families, and definitely more time to do the things that we enjoy. So I like to trade from home, right? So everybody trades from home. We were not affected by the pandemic in terms of losing our jobs, because guess what? The stock market and the futures market is never going to go bankrupt, even though it was late March where the CME and the New York Stock Exchange have closed their floors completely, and they were diverted to electronic trading. So you can trade from home an income producing style and generate between $5,000 and $5,000 a day average. And that is with actually a smaller size account. That's right, with a smaller size account. I trade futures for a living. Trading futures is not a job and it's not a hobby. Trading is a lifestyle. And once you're going to get into this lifestyle, you're going to see that it becomes addictive. And it's addictive in a good way. All the time, you're going to want to check your platform or your apps to see where the prices are. And that's a very good habit, because you get into habit, the more charts you see, the more patterns you are going to recognize. And that is very good, because trading is visual. And once you have visual memory for winning patterns, there's nothing stopping you. So I trade with the institutional money flow every single day, because my schedule is from 9:30 into 11:30. But wait, I don't really start my research right when the market opens. I start about an hour and a half to 2 hours before the market even opens. I collect all my intel. So I do have a ritual before I start my trading day. First of all, I collect all the data that is out there in relation to stocks, to upgrades, to downgrades. The reason for that is that some very powerful stocks like Nvidia or Apple or Google, these are market movers, especially from NASDAQ. And if they receive any kind of upgrades or downgrades, they are likely to influence and impact NASDAQ. The same goes for, let's say, for Boeing or UNH or financials like JP Morgan or Goldman Sachs. They're highly to influence the Dow. And also, let's face it, they're going to influence the mini S&P. And especially if you have financials and if you have energy stocks that are leading or lagging, you are going to see the effects into the mini S&P. I focus on high velocity moves and high rewards. So when I initiate a trade, I don't trade a lot, but when I initiate a trade, I look for the minimum risk possible and the best return on my investment. I day trade from 9:30 to 11:30 a.m. Eastern, and we're going to circle back to that aspect, and I'm going to share with you why that represents my prime trading time. And I'm trading 2 hours and done. Most of the time, I do run a trading room of trading room that is from 9 o'clock till 12 o'clock. And a lot of times in the trading room, we're done at around 10 o'clock or even quarter to 10, because we're getting on those high velocity moves, on those institutional moves. I focused on 4 charts, and we're going to circle back to these 4 charts, and I'm going to share with you what these 4 charts are. Basically, I focus on the futures indices. These are my income producers, and these 4 charts represent my employees. I deploy precise strategies at specific times and at specific location. I apply simplified management because, hey, what's a trade without management? First of all, you have to have a very accurate entry, stop, and target level. If the trade goes against you, then you have a method that you need to apply to protect your capital. So that's what the stop is for. So you're basically going to be stopped out of the trade. But if the trade goes for you, you need to have a management plan in place. How do you react when the index or whatever you're trading is reaching target one? Are you selling partials? Are you selling half? Or what are you doing with your stop? Are you lifting your stop off? And what is the location where you're going to lift the stop to? So these are some of the things that we have very clearly defined in our trading system that makes it a no-brainer. Literally, it's a stress-free environment. We know exactly how to react when the price reaches target one. We know exactly what we need to do with the stop when that particular spot is triggered onto our price. And the same goes for target two, the same goes for target three, and so on. And also, I love to trade futures because, and trading in general, because you have unlimited income potential and no excuses. You can trade trading not only in the first 2 hours like I do, but you can trade trading 24 hours. It is a market that actually could take advantage of even right now. As we started the webinar, it is 7:16 a.m. 7:16 p.m. and the market is moving. There are opportunities every single moment in the market. So for me, trading is part-time, trading part-time with full-time profits. I'm going to be sharing with you tonight also a glimpse of the portfolio and what we realized from the beginning of the year. Trading is awesome. Once you embrace trading and once you get on the winning track and learn how it's really done, it's not hard. It's hard if you spin your wheels and if you really don't understand what you need to do. And if you don't have someone to ask, hey, how about this situation? What do I do now? You need to have someone by your side to ask any trading question that you have. Because remember, when you're trading, there is no silly questions when it comes to your money. This market keeps you on your toes. It's fast and the furious theme, volatile, which makes you more focused and perform better. In high volatility markets, and when the market is paced at a very high speed, I tend to zoom back a little bit, and your sharpness is even better. You're always going to perform better in volatile market environments when you know how to trade. Trading is fun. And it is really rewarding if you know what you're doing and if you learn the rules. It's not hard. Think about it. If an algorithm can do it, you can do it. The reason why algorithms have a high success rate is because algorithmic trading, algorithms do the same thing over and over and over and over again. How about humans? Not so much. Why? Well, because emotion. When you enter a trade and when you have a stop, right, you don't feel that well afterwards to push the pedal to the metal immediately the second time around. And you kind of doubt yourself. Well, algos don't do that. Algos see the setup, they take the trade. They don't see the setup, they don't take the trade. And that's exactly what is very important to trading, to take every single setup that meets your trading criteria. By the way, this is my trading setup. And this is my office in Boca Raton. I'm in Detroit, Michigan, actually north of Detroit. And I have two offices. In the winter time, I am here. And in fact, I'm in Boca Raton, Florida, more than, I would say, 9 months out of the year. Not a snowbird, but I like to spend my summers in Michigan. And in Michigan, I have a similar layout, but I only have 4 screens here, so I don't have 5 screens. And this is a setup that helps me visualize everything that is happening in the market. So I've been talking about the watch list, and I'm going to circle back that I trade only 4 indices. Well, here is my watch list to the very left-hand side. And I have it zoomed in for you to actually see how it works. This is my active trader, and this is the dome where I execute my trades. This is actually my home screen where I have the same symbol on all these time frames. I have smaller time frames, larger time frames right here. These are my executional time frames, and these are my analytical time frames at the very bottom. And I have some watch lists that are overlap within these 2 monitors. This is actually a scanner that I use for stocks. In trading, there is no average, and you should know that because there are no gray lines into trading. You either make money or you don't make money. You're either great or you're a loser. Sorry to be so blunt, but it's the way it is in trading. You're either great and punching in and scoring money and your account keeps on growing, or you lose money. It's sad, but it's the way it is. Circling now to my watch list. This is what I watched, and this is what I display every day in my trading room. In fact, here I have my 4 indices. This is the Dow. This is the E-mini Dow. This is the E-mini S&P 500. This is the E-mini NASDAQ. And this is the E-mini Russell that has the symbol covered up. This is oil to the right-hand side, and this is gold to the left-hand side. And by the way, have you seen the massive drop in gold today? Over $70 down. Yikes. All right, so it's really hard to miss a trade when you're only watching 4 indices because like I said, you know, trades that are happening in gold and oil, and especially this kind of market environment, gold has been very volatile, not really great for day trading, and the same for gold. So I'm not really touching those right now, but there are times and where we have been day trading oil and we have been day trading gold, but today was not a good example, and this week was not a good example for that particular type of move. Okay, so are the charts moving right now? Just want to have a quick heads up on that. Okay. All right, so let's move on. Oh, before we move on, I want to show you circling back to the concept of synchronicity and divergency that I mentioned early on. So we had 2 big bars to the upside, and actually we had a 30-minute up, right? So we had first 15-minute bar, second 15-minute bar from the open that had moved to the upside. And then we had, take a look at these 2 bars right here. So we had 1, 2 to the downside. So this is a very desynchronized market. It's a divergent market where you have an index that is moving higher and you have an index that is moving lower. At the same time, you had similarity and synchronicity from Russell, because Russell as well left some topping tails behind and started to move higher in symmetry with YM for also about 30 minutes at the beginning of the session. And you can see here a pretty sideways type of action into the E-mini S&P, trying to mimic a little bit the pullback into NASDAQ, right? So we had 1, 2 down right here, and then we had the rotation back to the upside. So this is what a desynchronized market looks like when you're seeing the move up in 2 indices or even 1 index, and then you have another index that is in total moving in total opposite direction. One of the reasons why I like trading futures, well, obviously I switched to trading instead of trading stocks, which I did for more than 17 years or so. I took on the futures market, first of all, at the advice of my accountant because of tax purposes. So this is more advantageous for any trader to trade. One of the reasons why I love trading futures is, number one, you can take a short position with these. There's no uptick rule. So how many times have you found a stock, did the research on it, but you neglected to look at the top of the screen to see whether it's easy to borrow or hard to borrow? So when you're trading futures, you don't have to pay attention to that factor because you can short anything you want. You can trade lumber, you can trade natural gas, you can short it as well, you can go long as well, the indices or anything that you like. So you do not have the uptick rule. You have constant reliable volume. Now, let me share something about the volume. Today and yesterday, we had below average volume. And in fact, this week, it is a special week in the market because we had, first of all, we had some announcement. We're going to have unemployment claims tomorrow, which is going to be definitely a market mover at 8:30 a.m. Eastern. And we're going to wrap the week with huge option expiration. Whenever you have option expiration, you're going to have volatility in the market, and also you're going to have some unexpected moves into the market. So the specialists are going to try to pin these indices along with stocks at predetermined prices. And we don't know what those prices are. But we could get an idea based on the confluence areas that we have on a chart and based on the price action as we're going into that event. Trading major markets is another huge advantage for the futures market because you're basically trading the SPX right through the E-mini S&P 500. You're trading NASDAQ. So you're trading the most powerful tech companies. You're trading the Dow, which are the power companies like Boeing and UNH and Caterpillar, etc. And Russell, definitely a really big player as well. I like the fact that you have different tick values and price ranges. So I'm going to give you just a quick example. The Dow has 1 point in the Dow. Let's say it's moving from 27,600 to 27,6001. That is one tick or 1 point. It's the only index where a tick is equivalent to a point, and that is $5. Versus the E-mini S&P, 1 point in the E-mini S&P is $50. So if it moves from 33.67 to 33.68, that's boom, bam, $50. Also, NASDAQ. NASDAQ has a point, like I mentioned before, NASDAQ had 1 point in NASDAQ is $20. So if it moves to from 11,300 to 11,301, that's $20. And Russell, very similar to the mini S&P, 1 point is the $50. So if it moves from 1570 to 1571, then that represents $50 for you. I'm just going to give you an example. So you can see that we're starting with different tick values and price ranges. So that is very accessible for any kind of level trader and any account size. You can use minis or micros, and even full-size contracts are available. So last year, the CME came out with micros, and that is a huge achievement coming from the volatility that we had in 2018. And we're going to circle back, just remember 2018, and we're going to circle back to 2018. It's great to have these instruments available because you can position size better, you can scale in and out, and of course they are accessible for for small account holders. There are also minis available. So you have a mini gold. So for instance, let's take the gold, right? So gold has a full size contract available, which full size contract, you know the definition of a full size contract. It has a mini available, which half the size, and it has a micro available, which is 1/10 of a size. Oil has the full size contract, and it also has a mini available, which is half the size. Natural gas, the same. It has a full size contract and it has a mini, which is half the size. And of course, futures indices, they do have the full size contract, and the CME came out last year with the micros, which are phenomenal, especially in volatile markets, for small account holders, like I said. And not only for that, but they're fantastic for swing trading, where in swing trading you have definitely wider risk levels. You don't need any special indicators to be trading futures. And in fact, any kind of indicator is going to delay your learning process. And I have been preaching this for years. I even have an example from one of my students that took my class in 2016. And right after he took the class, we were trading together. And at one point, he said, you know what, I'm going to take about 3 months off. It's like, okay. After about 4 months or so, he came back, so he didn't come for the repeats for the course, and I haven't seen him in the trading room. So at one point, he comes back and he sends me an email and says, hey, I got sold onto an indicator, and guess what? I spun my wheels for about 3 months learning how to use the indicator just to lose money every single day, because these indicators are not going to create that visual memory for you. You need to learn how to trade. You need to learn how to identify these winning patterns that are going to be your producers. And any kind of indicator is going to delay that process. There is not one special indicator in existence that is going to have the capacity to provide you with those fantastic returns. And we're going to circle back to that as well. The one thing that I like is that it is safe from rumors and there's no pump and dump, right? There's no manipulation and no downgrades and upgrades. So we're never going to have the surprise of a gap up or down just because there's a rumor into the E-mini NASDAQ or the E-mini S&P. And the reason why I like it the most is because it is a hands-on risk experience. So that means that if I want to take a trade right now, or I can do it, or if I initiated a trade earlier on today, and let's say I want to manage it, or I want to place a stop, let's say at 7 o'clock or 8 o'clock, or I want to add to the position, let's say long or short, I can do that. You do not have that luxury in the stock market. And then in the stock market, you can definitely have the surprise of a gap up or a gap down because you cannot intervene. One of the reasons many traders gravitate towards futures trading is the relatively low startup cost. For example, it usually requires about $30,000 to open a stock day trading account, and you must maintain at least $25,000 to keep your day trading status. Because if you lose 1 cent, poof, you cannot day trade anymore. The futures market allows you to open an account for as little as $5,000, and best of all, you do not have to maintain that account. Because as long as you have sufficient cash in your account to cover the margin requirements to trade that index, that or commodity, you can actually have a balance of, here's this, $700 to $800 and still trade futures. And that is, of course, you trade commodities. Of course, it depends on the margin requirements as well. So if you fall behind into that kind of size, then definitely micros are for you. I want to show you an example. I'm pretty sure that right now in our audience, we do have a lot of stock traders. And I'm going to show you an example that is literally going to blow your mind when I'm going to talk about the difference between time versus money, and of course, versus buying power. How much money you can make in the least amount of time trading futures versus trading stocks. And this is an example from today. So I'm going to start with the advantages of trading futures with the Qs, right? So if a trader wants to day trade the Qs that are priced at, and everybody knows the Qs are the ETF, right, for NASDAQ, that are priced at, let's say hypothetically $280, the trader needs about $14,000, a little bit over $14,000 to buy 100 shares. So if the price goes up about 50 cents, which is a huge implied move for the Qs, that would be about $50, which is pretty good, right? Taking into consideration that you only have 100 shares and basically you are making $50 with a $14,000, let's say, margin requirement, because each cent is going to represent a dollar. Now, here's this. If a trader wants to day trade the E-mini NASDAQ that is priced at, let's say right now it's priced at 11,295, the trader needs about $17,000 to buy one contract. Now, why do you need $17,000? Because it's usually half of the size to buy the Qs. That is because of the 2020 pandemic volatility. Whenever you have volatility in the market, the margin requirements is going to grow exponentially. So just watch to see what's going to happen in the market as we're approaching election and on election night. You're going to receive a letter, an email from your broker that they're going to increase your margin requirements exponentially for the duration of at least 3 days, two to 3 days ahead, and perhaps even 2 to 3 days after. So take notes for that. So if the price goes up, let's say 50 points into the E-mini NASDAQ, you are going to have a realized profit of about $1,000 because each point represents $20. Are you ready for the visual? Because remember, I said that trading is so visual. All right, here's a chart of the Qs, and this is from today. This is actually from this morning. I took the snapshot at 10:30 a.m. Eastern. So this is a chart of the Qs. This is a pullback that was divergent compared to the Dow and compared to Russell. and it came in into a level of support, and then it rotated and it continued higher. The entry price point was here at this rotation. So this was our entry, this was our risk below, this was our entry above, and this was our rotation. So in this particular case, we were looking for a target into the high of the day, which we have achieved and closed. You can see this little wick right here that came into the high, and this was our target. So for this move, the account requirement calls for $14,000 to trade 100 shares. We were 100 shares in and 100 shares out. The exit price at the exit price we had a realized P&L of $73. So what that means that we entered the trade at 10 o'clock, because remember at the beginning of the presentation I mentioned that there are three very important times in the market. There's a 9:35, there's a 10 o'clock, and the 10:30. This we executed, and the parameters lined up with 10 o'clock. So we entered the trade at 10 o'clock. The trade duration was 20 minutes. You can see that each candle right here represents 15 minutes. So this is where we entered, and we continued for another 15 minutes on this bar, and it took very quickly right here another 5 minutes before we closed the trade. So all in all was 20 minutes. 20 minutes in and out, stress-free. With 100 shares, we had a realized profit of $73. Okay, so this is the cue. This is not a bad trade. So I want to suggest that, hey, 100 shares to make $73. This is pretty awesome. Okay, now let me share with you something else. This is the same trade, and it is using the same criteria that we teach in the Trade Out Loud Power course. The trade was also today. You can see the timestamp right here. And the trade enter was at 10 o'clock. We were looking for the same rotation. The trade duration was 20 minutes. We executed the trade with one contract. You can see it right here, one in, one out. And on this particular trade, we realized using the same strategy, absolutely the same strategy that we used for the trade before us in the queues, we actually had a realized P&L of $600. Using a buying power of $17,000, because that's the new margin requirement to trade NASDAQ. So I'm going to ask you fair and square tonight. Do you see the reason why I have switched to the futures market? Number one, for chart simplicity, because I only watch 4 indices. And of course, I do watch and I do trade a plethora of other commodities. I do trade bonds. I love to trade bonds as well. The 10-year note, the 30-year bond, the 5-year note, you name it. I also trade metals. I trade gold and silver, copper, etc. Copper, by the way, has a beautiful continuation to the upside. I could trade lumber, I could trade grains, or I could trade softs like orange juice. You could trade anything that you want onto the futures market, even currency or even currency pairs. And you have so many advantages because you're multiplying your profits. So when you know what you're doing and when you deploy the right strategy, these are the results that you're getting. So I'm going to ask you again, fair and square. In 20 minutes, if you're trading 20 minutes in a day, like in this example right here, would you, from today, I highlight from today, would you rather trade the Qs and make $73 with using about averaging $14,000 in buying power, or using a similar buying power, trading NASDAQ and making $600? And I think the question is rhetoric, because obviously any trader will opt for trading futures. And this is one of the things that attracted me to the futures market. And the reality is that I was day trading stocks, and the one common denominator for me every single morning when I would do my homework before actually diving into the trades at 9:30 is I would look at the market conditions, and I would analyze the Qs, the SPYs, the diamonds, and Russell. And I would analyze all of these 4 indices before I even dove into gaps or power trends or any kind of continuation patterns that may represent a trade for stocks for that particular day. So for me, it was such a no-brainer that at one point I was doing so much work, trying to identify the power plays for the day, find the bullish list, find the bearish list, etc. You know how it is in stock trading. that I realized that I gave it a try for about, because it was so much work, I gave it a try for about 2 weeks. And I said, hey, for 2 weeks, I'm not going to do any homework. I'm just going to try to trade just the Qs and the SPYs and see what happens. I loved it so much. And then I realized that, hey, there is a futures market for that, and I could specialize in that. And that was the big switch that I made. Like I said, it was about 8 years ago, because instead of making and using my money to make very little money, right? I'm using a fraction of my money, and then I'm quadrupling. I mean, literally, we're almost talking about 10 times more, seven to 10 times more is what you're going to be making. So definitely there are literally tons of advantages for trading futures. You could trade futures with full size. If you have a little bit larger account size, you could go ahead. Remember that in volatile market environments, you're going to have a wider risk level. So therefore your stops are going to be much wider. Or you can trade micros. You can have a small account and you can trade micros. There's no excuse. Everybody can literally participate in this market. And even if you do not have an account as well at all, you could still trade the futures market. And if you're interested in that, if you don't have an account and say, hey, I want to get started with trading futures, what do I do? Shoot me an email at info@tradeoutlloud.com and I'll point you in the right direction. We were talking earlier about the futures indices, right? Futures indices are fantastic. This is the equity index futures suite. These are the full-size contracts, and they're very mighty right here. A lot of traders blew up their accounts in 2018 because 2018 was a very volatile year. If you guys have been trading 2018, you pretty much know that that volatility came poof out of nowhere, and it was very treacherous to trade starting with February 2018. Before that, from election, that was the last time when we had volatility in the market. Basically, it was the election night when the market pulled back, the Dow went to 17,500, and that was a buy point. I was a buyer at that level into the Dow. So it was a great, fantastic opportunity, because guess what? It happened in the evening hours. So you could actually take advantage of these phenomenal moves that are happening in the market, that are totally, if you have the risk parameters in place, they are not risky at all. You allocate your risk for that specific trade and your position size for that accordingly. So we have the full size contracts into the mini S&P, into NASDAQ and Russell, and the Dow. The CME last year on May 6th came out with the minis, and that is following the volatility from 2018. And they came out with these minis that represent 10th of the size of the full-size contract, which is phenomenal, because you have 10 contracts that actually form one full-size contract. You have 10 contracts in NASDAQ that actually form one full size of NASDAQ full size, and so on. These are great if you're just starting your trading career. These are great to start with. Because you can have some skin in the game. You could actually trade, and you can actually be responsible for the trading that you're doing. They're much better than paper trading. And that's the reason for it. You have some skin in the game. It is a great way to participate. It is a great way for small account holders to participate in the market. A market that is literally, in this volatile environment, is prohibitive for small account holders. You can scale in and out of trades. It's not that I really use scaling in, because I know exactly where I want to enter my trades, because guess what? You either know where your entry is or you don't know where your entry is. Scaling in is again saying, like, I'm really not sure what this market is doing. I'm just going to take a little bit long here. That doesn't really work. And all my trades are executed on limit orders, because I know in advance where the price where I want to purchase it. And it's also great for swing trading, because in swing trading, you have really wide stops. And come election, guess what? I may be tapping into some micros as well. The reason why I love trading the first 2 hours is because in the first 2 hours, you have the sweet spot. You have the overlap of the London session, and you have the overlap of the New York trading session. And that goes on for the next 2 hours, from the open, from 9:30 to about 11:30 a.m. Eastern, when the London market closes. Now, the stock market, as you know, opens at 9:30 in the morning and it closes at 4 p.m. Eastern, 5 days a week. Well, the futures market is an active market about 24 hours a day. Of course, it closes and it reopens, it reshuffles, and between 4:15 and 6 o'clock, and the new trading session starts at 6 p.m. And that is 6 days a week. So the futures market opens on Sundays at 6 p.m. Eastern, and it runs into Friday at 5 p.m. Eastern. So it's basically a 24-hour market. The reason why you don't have a good grip on the stock market is because if, let's say, something happens in the overnight trading session, you have to wait until the market opens. So before you actually move some stops around or you trail some position, and the trades oftentimes can go against you. Been there, done that. You could have big surprises in the market of gaps up and even some gaps down. But in the futures market, you can react as events unfold. Because guess what? Geopolitical events do not wait for the market to open. Events just happen. And when they happen, you need to take advantage of them. Many traders, many markets that affect the US markets trade outside of the US market hours. And you can take advantage of this market. I trade 2 hours per day and I day trade futures, and I profit from the most volatile part of the day and trade only high odds trades, 75% or up. If I see a setup that does not have all the checklists or the majority of at least 75% of the checklist, I do not take the trade and I prefer to skip it. I refuse. I would much rather have a trade that even triggers and goes, but if it's not clear to me, I would rather not have a trade than have a losing trade. And when I'm going to share with you my portfolio, you are going to understand why that is. I get in and I get out fast on high momentum. And this is for instant gratification. And this is my income producing style method of trading. So is it easy to succeed in trading? If you have the right mentorship, it's not hard. You could actually learn. You could actually make money as you're learning, as 100% of my students are doing. Sometimes, traders decide to go the slowest route and they want to get to work. They want to get themselves familiarized with some charts. They want to learn their patterns on their own, and they're struggling with doing that because you don't know how many traders are depicting wrong trading habits just because they insisted on learning some things on their own. And the problem is that they did not know how to put the things together. Even if you have the right information, let's say about technical analysis or about strategies or about trading psychology or about entries or about risk or about management or about trailing. It's all about how you put everything together. It's not about the strategy. It's not about the management. It's not about the mindset. It's not about the experience. It's not even about to the attention in detail. It's a system. You have to work together. You have to know how to put together multi-time frame alignment to find out where those prone institutional areas are and where the big suits are lining up to buy or to sell. And you have to be in sync with them. So a lot of times traders, just they keep on going, and this effort, because it's a real effort. I mean, I really applaud the fact that a lot of traders are so determined to make it in this industry. And they keep on pushing forward and forward and forward. And, at one point or another, they crack down. They say, hey, I'm going to quit. For two reasons. Number one, they blow up their accounts. They don't have any more money for funding the account. And number two is that they're running in circles and they say, hey, you know what? Trading doesn't work. Well, let me tell you, trading works, and it works fantastically. And I have the performance to prove that to you. So you have two options. You just keep on going and add on, layer on as you're learning, and trial and error kind of trading for you, or you just quit, cut the cord, learn how it's done, and do it while and actually trade and make money as you're learning, and then you win. You learn winning strategies. Your visual representation of charts is going to be printed in your brain, so the next time around when you're going to have the similar pattern, you're going to know immediately what you need to do. Oh, okay, so it's a 15-minute rotation. That's the entry, that's the stop, boom, that's the target. It's that easy. So when you have a pattern and when you look at charts, you have to be able to identify trades with ease. Trading should be stress-free. Hard work doesn't necessarily guarantee that you're going to get up there. And it's a sad reality that over 90% of the traders don't get there because they either ran out of money or they just quit. So if trading was easy as going to Amazon, picking up one or two or three or five or 10 books, reading them, and getting into the market, that would be fantastic. We would have a bunch of billionaires just trading the market. Or buying an indicator, shiny indicator, where you're always going to have after-the-fact arrows that are pointing up or down, and you're always going to miss that. It's going to be a game. It's like, I got to watch that arrow. When is it going to turn? So it's never going to work. So the only people that are making money off these indicators are the people actually that are selling the indicators, because if they were making money off the indicators, they would just make money off the indicators. So why futures again? Well, first of all, you create your income from home. You don't have to leave your house, whether you decide to day trade or swing trade. Swing trading is a style of trading that is unchained, where you're unchained from the computer, and your trading is realized on much higher time frames. Or day trading, where you basically trade 2 hours or 3 or 4, or you decide your schedule. How amazing it is, and how fortunate we are that we are day traders and we never had to leave the house during the pandemic. And we didn't have to rely on any kind of stimulus checks. I mean, that's a huge bonus. I don't think any professional trader got any stimulus check. You also can have a limited income potential. The more you work, the more you dedicate yourself to trading, the more income you're going to generate. It is a recession and depression proof skill. Now, if we have learned anything from this pandemic, is that anything can hit us at any time. So prepare yourself for recession, for depression, for anything that comes your way. It is a skill in which you invest. However, the return on investment is phenomenal in your future, and you're just going to get better, better, and better, just like fine wine. Control your time and do the things that you love in life, whether you want to spend time with your family or whatever you want to do. Just have more time for a hobby or etc. It's more time for you. So can anyone make money in the market? Well, educated traders are always going to make money into the market, because they're mentored and they are drilled information in their head every 5 minutes. That's what I do in my trading room with my students, and I drill information in their head because I have the same type of trading environment. I was very fortunate because I come from financial background. I was not let to blow my account up. And I was very fortunate that I come from and with economic experience, and I never had to struggle as a trader. I had guidance every single living second as the market was open when I was trading stocks. So I had help from 9:30 all the way until not only until the market closed, but after the market closed at the very highest, the most professional level. And this is my transfer of know-how to you. And I'm telling you really bluntly that if you don't have the education, you're not going to have the money. Just like if you don't have the patience to wait for the pattern, you're not going to have the money. I wish I would understand the traders that say, I don't have the patience. I'm very impulsive. I got to get into a trade. Like, why? If you have the setup, you have the trade. If you don't have the setup, you don't have the trade. So therefore, you have the patience to wait for the setup, and then you have the trade. There's no such thing as you don't have patience to wait for a trade. That is just the number one lack of discipline that I really don't understand it, because you have to wait. You have to first define your time frame. If you decide that your time frame, your zip code is going to be, let's say, the 5-minute charts as a day trader, you have to wait for pattern formations. Now, patterns don't happen every second on the 5-minute chart. As the chart implies, every candle represents 5 minutes of trading activity. And for a pattern to develop, you need to have at least 2 or 4 candles formation. So trading is not for everyone. We turn risk into profit, but you need to be willing to take that risk. And learning how to trade is not inexpensive and can be a good chunk of change, but compared to those trading losses and mistakes that you're doing and you may be doing and repeating and you don't even know you're doing, that's a big thing. So invest in your future. I don't care where you get your education, but make sure you have robust education, because this is a market for very astute traders. So how much money have we made trading this year? So let's say you have joined us on January 1st, and let's say you took our course in December, the last week week in December when we taught it, and you started trading with us January 1st. You want to know how much money you would have made with us? Transparent track record. Every trade is backed and time stamped in our trading room and also written down. Over $109,000 in profit, trading only 2 hours a day with me, guided trading, me spoon feeding you the trades, and not a lot of trades, between 1 and 2 or 3 trades in a day with only one contract. Yep, you've heard it. So over $109,000 in profit, trading only 2 hours a day with one contract, and you didn't have to do anything on your own. Everything was 100% guided. There is no second trading room in the world that is doing what we're doing. It's 100% guided system where before the setup happens, you're going to be communicated the exact entry, the exact stop, so you have time to place in a limit order, not a boom, poof, market order. And you have time to place the stops, you have time to work your chart up, and once the trade triggers, you have me on the mic for these hours, 2.5 hours or so, actually 3 hours from 9 o'clock till 12 o'clock, where I'm constantly on the mic. Yeah, I don't take any kind of breaks, because when I'm trading, I'm devoting my time to this. I have educated myself to trade 3 hours a day from 9 o'clock to 12 o'clock. There's no such thing as a bathroom break, or there's no such thing, oh, I'm going to take a coffee break, or I got to do this, I got to answer the door, I got to answer the phone. Oh, wait, I'm going to be off the mic for about 5 to 10 minutes. No, this is high professionalism. Now, let me walk you through some of the results. This is the sweetest part. It's the fruit of the labor. It's my pride, and this is why we're nominated for outstanding performance and the best financial literacy tool worldwide. So in January, we had 37 trades, 8 losses, 45 trades in total. And the win ratio, 82.22%. You can see all the trades right here. And by the way, this is an active portfolio that we have for our students. And it is real time. So they see it real time every single time. It's not an Excel sheet that, you pop it up, no, this is real-time performance portfolio. And you can see that at the end, I don't know if you can see it right here, but at the end of the month, we had an accumulation of $6,223.73. Now, does the winning streak continue? You bet. This is February, when the volatility has started and COVID was front and center stage. We had 26 winning trades, 4 losing trades, 30 trades in total. Our win ratio, my win ratio, is 86.67%. This doesn't happen by chance. This is because I'm applying the best methodology that any hedge fund and institutional traders is applying. Realized profit, again, trading with one contract. You can see here, realized profit per contract. And this is only in 2 hours. I'm not trading all day. These are the results from 2 hours. At the end of the month, 10,188. Month of March, 91.84% batting average. You can see now why we are the most sought after firm for trading education. 45 winning trades, 4 losing trades, 49 trades in total. It was very, very active month, very volatile. With one contract, again, one contract, 26,777, one contract per trade, ladies and gentlemen. Month of April, 70% winning average, 26 winning trades, 11 losing trades, 37 trades in total. All trades, again, live in front of live audience in only 2 hours a day from 9:30 to 11:30. And again, this is per contract. And the result, 16,888. Month of May. In the month of May, we have 30 trades, 30 winning trades, 7 losing trades, 37 trades in total. Win ratio, 81.08%. You cannot make this thing up. Show me another firm that is showing this kind of information and has this winning ratio. Now, month of June, 27 winning trades, 14 losing trades, 41 trades in total, 66% average, 66% winning ratio, 4,625. One contract, all you have to do is literally be brain dead and you follow my directions to the T. July, 34, this was last month, 34 winning trades, 7 losing trades, 41 trades in total. 82.93% is my personal batting average for calling the trades in the trading room and spoon feeding everyone. $12,845,000 in a month trading with one contract. Month of August. These include, by the way, today's trades, where you can see them right here. Today is August 19th. So we had a winning streak, no losing day. We had only one losing trade today in the Dow. First trade that we took in the Dow was a losing trade. We lost $250 per contract. The second trade we took and we made $50. And the third trade that we took in NASDAQ, we made $280. Total so far, but we still have, the month still has not closed yet. We made close to $3,000. We teach and trade live every single day, a highly successful algorithmic system that follows institutional money flow in the first 2 hours and enables us to profit on momentum moves at specific times, locations, and precise technical patterns. Our methodology overrides any kind of news event, because what is news within a trend? A brief interruption. Any artificial indicator, we are no match for it, and I'm no match for any kind of indicator. I beat up any kind of indicator any time of day or night. Earnings and even dark pools. So if you're wondering, is trading hard to do? And I always say to my traders, hey, trading is like driving. Do you remember the first time when you got in a car and you learn how to drive? And you have to keep track of your gas, your brakes, your mirrors, so you don't crash. Well, once you got used to it all you have to worry about is getting to your destination, because everything else becomes second nature. Do you think now, like when you get into your car, you think like, okay, do I have my seatbelt? Check. Mirrors, check. Let me go look around, check. No, it's second nature. Trading is the same. So you have to keep track of your gas, which is the entry. It's the only time when your account is at risk. The entry, you press the enter button, you're in a trade, boom, your capital is at risk. Your breaks, what is your breaks, and what are your breaks represent in trading? Your stops, you need to have stops. What happens if you trade without breaks? You could crash, right? So you crash your account, so you need to have a stop. How about the mirrors, the seatbelt, etc.? You're looking left and right. You have to look for your market conditions. What are the market conditions? Is the market synchronicity? Is divergent? Is it trending? Is it not trending? And of course, you have to keep track of take profit, and of course, the inevitable stop out once in a while, because that is what you protect. That is how you protect your capital. But once you get used to it all, it becomes instinctive. The rest becomes instinctive. So would it be helpful to have someone that can teach you everything how to drive the market, the futures market. So we have a course that we're teaching. It's the most sought after course. It's the Power Income Futures Trading course. It is an institutional grade trading system where I teach you how to trade stress-free levels. I am conducting and I'm running a trading room that is with hundreds of people, and we're all trading stress free. There's no yelling. We know the levels ahead of time. We know when we want to be a buyer and at what price. We know in advance where we want to stop. We have the whole blueprint. We have precise buy and sell zones. We have management. I provide live management for every single trade. Hey, if you're in a trade and you need help and say, hey, I got into this trade, I don't know what the heck I'm going to do with it, I am helping you manage that trade. Also, risk management. We actually provide you with such a comprehensive system that it's going to take you from point A to destination point Z as a professional trader. We're going to teach you high odds patterns and setups, how and where to place your stops, and also what kind of stops you need to place, because there's a wide variety of stops that you can use. We're even teaching you trading psychology, and most importantly, how to put the puzzle together, because it's fine if I'm teaching you like all these little segments, okay, technical analysis, entries, this and that, or whatever, but if you don't have someone that is going to put the puzzle together for you, you'll learn everything for nothing. The Power Income Futures Day Trading course, it's a 5-day live course. It will start next week, and it's an online masterclass. You'll discover how to successfully trade the 24-hour futures market. It is really an intensive course that is going to teach you not only how to trade indices, but also how to trade energies, metal, commodities, bonds, futures, forex, or any instrument. You're going to discover the sweet spots for the 3 trading sessions for Asia, Europe, and London, and how to take advantage of really powerful setups that are developing in any of the sessions. We have traders that are coming from Australia. We have traders from New Zealand. We have traders that are coming from Asia. We do have a lot of traders from Singapore, a lot of traders from Hong Kong, a lot of traders from Saudi Arabia, from the United Emirates, and so many traders from Israel, from Europe, from definitely from North America, South America, you name it, all over the world. We're going to teach the most powerful day trading charts and patterns and how to exploit them for above average gains. We're going to teach the 6 major disciplines in every trade: the entry, the stop, the target, trade management, position sizing, and trailing. We're going to teach you market tempo, because that is so important to know exactly when to enter and when not to enter the trades. Because if you got into a trade and got stopped out, guess what? You got in at the right time. If the trade turned around on you, you got it at the wrong time. We're going to teach you proper multi-time frame alignment so you don't waste your time and your money in the market. How to maximize your timing using key moving averages and other powerful free indicators that any hedge fund is using and institutional traders. How to maximize gains and minimize losses using proper money management techniques that are going to keep you sane throughout the trade. Market timing, like I mentioned before, there are certain timings in the market that are prone to institutional buying or selling. Precise zones when to buy and sell, so you will know exactly when you need to buy or sell. Advanced technical analysis skills. You won't need another manual or book or to read anything in your life. This is a super comprehensive course. The course is always live. It's taught every month. You will have access to the retakes for free every single month. You're also going to receive the recordings from all the courses that are yours to download and keep for free on your computer. You can actually watch them without any kind of internet connection. You also are going to have access to a professional platform layout, because it is very important to have the real estate where you identify any kind of trade that comes your way, so you don't start toggling charts and moving charts around. I mean, that is just a no-no when it comes to professional trading. So we provide that for you, because your winning strategy is directly correlated with the layout that you have. We're also providing you risk charts because position sizing is the very important, because guess what? In trading, the only variable is the entry between your entry and your stop. And the risk that you're applying for trade is always constant. That's how you grow your account. If you do not know this concept, if your account is not growing and you keep on losing and yet you're seeing that you're having some winning trades, that's your number one reason why. And you're never going to make it unless you understand this concept of position sizing. And also you have access to student-only specialty courses. These are courses that are taught, and we have taught these to hedge funds. And these are high caliber trading tools. And especially we have a course that we're going to be teaching this upcoming November, and it is a trade that it is a course that it's going to teach you how to trade around holidays, because there are different specifications around holidays of taking into consideration the volume, market conditions, etc. How to trade around election year, because we're election year right now. We teach you how to trade window dressing and January effect. These are concepts that may be like mind-blowing new to you. Window dressing, January effect, Santa rally, etc. All that is included with this course. The course is starting actually next week on Monday. It is a 5-day course. It's from 2 to 4 p.m. Eastern time. We're actually going to be in the room for Q&A after 4 p.m. So if you should have any questions, we could go as long as 5 or 6 p.m. Eastern. And the course is, again, online, 5 days. And the course tuition is $4,995. You can go to our website, old website, 10-year website, TradeOutLoud.com/futures. And if you have any questions, you can email us at info@TradeOutLoud.com. But tonight, for you guys, we have a special offer. The offer is going to go away tomorrow. It's only a 24-hour special. And this is only for Investors Expo attendees only. It is the Power Income Futures Trading course that comes with a mega bonus. Number one, it's the Future Swing Trading course that you're going to be receiving for free with the purchase of the Power Income Futures Day Trading, which is $4,995 waived. And it comes with 2 extra months access to the trading room, which is 3 months total. Plus, we have added the trading lab recording and how to execute the trades on your platform, and it teaches you everything about how to use the dome, how to trail stop, and how to do all that fun stuff. And that is a 2-hour course that you will be receiving as well for free, recorded. The deadline for this special offer is actually tomorrow at 2 p.m. Eastern. Like I said, it's a 24-hour offer, 24-hour special offer. So we are very limited. We do not take a huge amount of traders because I work one-on-one with all my traders, because I want to ensure the success of all my traders. So thank you so much, Investors Expo, and for having me here tonight. Again, if you want to register, TradeOutLoud.com/futures, and any questions you may have, additional questions that are not answered on our website, you can address them to info@TradeOutLoud.com. So again, the bonus is when you're purchasing the Power Income Futures Day Trading course, you're getting the Future Swing Trading course for free. That's $4,995 waived. You're getting actually 3 months in the trading room with me. So just imagine, remember the 3 months? 3 months. How about trading 3 months? 3 months with me. Take a look at the returns right here. Trade it with one contract. Take a look at the returns right here. Okay. So that is how you're trading. You can expect with trading and the caliber of education that we're offering, the quality and caliber of the education that we're offering. Thank you so much, everyone. Have a great rest of the night. I really enjoyed being here with you, and I'm looking forward to educating you on how to day trade the powerful futures market. Thanks so much, Anna. Thank you, everyone.